Hello, everyone. It's Matt Clark, research analyst for Money and Markets with your Money Markets Week Ahead, what to watch on Wall Street. It's going to be a big week for cannabis companies. Plus, the 2020 presidential election is over. So now what? Here's some things investors should be watching on Wall Street this week. It was a rough week for Americans as Americans went to the polls to pick the next president of the United States. Of course, that wasn't the only thing that people voted on. There were ballot measures, Senate races, House races, local races, everywhere. It was a very, very big election with a massive amount of turnout. But now the attention for investors turns to what's next. In a recent episode of the Bull and the Bear podcast, I talked about this and the history of the stock market related to a big national election. And the results were pretty telling. In the first 2 years following a Republican win of the White House, the market goes up an average of about 8.3%. That's compared to a 5.8% gain if a Democrat wins the White House. There's a common misnomer that markets fare better when Republicans win the White House compared to a Democrat. But in the short term, there's some validity to that. However, over the course of a 4-year term, that's not right at all. The market's gained an average of about 8.8% over a 4-year Democrat term compared to just 8.6% over a 4-year Republican term. If we factor in congressional elections, it's about the same story. The only thing that throws a wrench in things is uncertainty. Markets hate uncertainty. In a hotly contested presidential election like we had in 2000, the S&P 500 fluctuated more than 11% from its high to its low from election day to when the election was finally decided by the Supreme Court in December. Fast forward to today, where the market seems to be taking off in a big way. Last week was a pretty solid week of gains for the market, and it goes to show the election itself really doesn't play that huge of a role on the movements of the market. On the IPO front, as of right now, there are really no initial public offerings scheduled for this week, but earnings are going to take center stage again. It is another full week of earnings for investors. However, there really aren't a ton of really well-known companies that will be reporting this week. A lot of smaller companies, even some over-the-counter companies will be reporting. But there are 3 big names in the cannabis field that will be reporting quarterly earnings on Monday. Canopy Growth Corporation, which trades on the New York Stock Exchange under the ticker CGC. Tilray Incorporated also trades on the New York Stock Exchange. Its ticker is TLRY. And Aurora Cannabis Incorporated trades on the New York Stock Exchange under ACB. Expectations for all 3 of these companies are for negative earnings per share to be reported. Analysts are projecting earnings per share of minus 28 cents for Canopy Growth Corporation on revenue expected of about $89.69 million. That would be a pretty big reduction in revenue for the largest cannabis player by market cap. In the last quarter, Canopy reported $119 million in revenue and earnings per share loss of minus 30 cents. For Tilray, the expectation is for earnings per share of minus 24 cents per share on revenue of $54.67 million. If those numbers hold, it would actually make for a bit of a better quarter for the company. In the last quarter, Tilray reported a 10% increase in revenue to $50.4 million and a net loss of minus 66 cents per share. However, the company did make some strides to cut some of its expenses, and the second quarter numbers were adversely impacted by an $18.6 million inventory valuation adjustment. Aurora Cannabis is projected to report earnings per share of minus 40 cents on forecasted revenue of right around $62 to $64 million. The company did report a 5% drop to $72.1 million in the last quarter. So if Aurora sees revenue of, let's say, $65 million at the top, it would be a solid loss for them over the course of the quarter. It would also be a drop from the $67.5 million the company reported in the same quarter a year ago. Another big cannabis player, GRWG Corporation, trades on the NASDAQ under GRWG, will report earnings on Wednesday. Analysts are expecting GrowGeneration to report earnings per share of 7 cents. That's positive 7 cents. That's actually good, on forecasted revenue of $47.38 million. The company reported record quarterly revenues of $43.5 million in the last quarter, prompting the company to raise its 2020 full-year guidance to $170 million to $175 million. If the numbers hold, this could turn out to be a very, very good year for GrowGeneration. Remember, you can check out my most recent addition to our cannabis watch list at moneyandmarkets.com, and don't forget to go to our YouTube channel to watch our weekly marijuana market update. In the data dump, it'll be another full week of data for investors to go over. The National Federation of Independent Business will release its Small Business Optimism Index for the month of October this week. In September, optimism, that index jumped 3.8 points to 104, a historically high reading according to the NFIB. The index has 10 different components to it. It looks at plans to increase employment, plans to make capital outlays, plans to increase inventories, expectations of the economy to improve, expectations of real sales going higher, current inventories, current job openings, expected credit conditions, whether now is a good time to expand, and earnings trends. It looks at all 10 of those and asks small business owners questions related to each one of those 10 factors. In all but one of those components, expected credit conditions, small business owners express solid optimism. Despite that, NFIB Chief Economist Bill Dunkelberg said small businesses were expected to operate, or were struggling rather, to operate at full capacity and had an uncertainty about the future. The real estate market will digest the Mortgage Bankers Association week-over-week mortgage application report on Wednesday. For the week ending October 30th of 2020, mortgage applications increased 3.8% over the previous week. Analysts attribute the increase to continued low interest rates, about 3.01% on 30-year fixed loans. The data dump will continue on Thursday when the Labor Department will release its initial jobless and continuing jobless claims. Last week claims were still around that 751,000 mark. It's better than projected, but still well below pre-COVID-19 levels. To finish off the Money and Markets week ahead, here's a look at some of the key earnings reports due out this week. On Monday, McDonald's Corporation, Ring Central, and Nikola Corporation will report earnings. On Tuesday, we'll see Advanced Auto Parts and Jumia Technologies. Now, Jumia Technologies, if you're not aware, is what's been billed as the Amazon of Africa, meaning they are a e-commerce provider and they focus primarily on the African continent. They will be reporting on Tuesday. On Wednesday, GrowGeneration Corporation, as we've already discussed, along with NV5 Global Incorporated and Neptune Wellness Solutions, will be reporting earnings. Thursday, the Walt Disney Company, along with Cisco Systems, Tower Semiconductor Limited, and Digi International will be amongst those reporting earnings on Thursday. And on Friday, we'll see earnings from Abercrombie & Fitch, as well as popular sports betting site DraftKings. That's all I have for you this week for the week ahead. Make sure you log into moneyandmarkets.com and sign up for our free e-letter. You can do that very simply by going to moneyandmarkets.com and then just putting in your email address. You'll get our daily e-letter. It includes safe and profitable information for you to make the best investment decisions that you can make. That's all for me this week. Until next time, everyone, I'm Matt Clark, research analyst for Money and Markets and the host of the Bold and Bear podcast, wishing you safe trading.